Welcome back for another deep dive. Today we're tackling the exciting world of tech stocks, specifically those poised to make waves in 2025. Our roadmap for this journey is BuyStocks.ai's report, aptly titled Best Tech Stocks to Invest in 2025. The report kicks off with NVIDIA, ticker symbol NVDA, and it really emphasizes their role in what they're calling the AI revolution.
NVIDIA's GPUs are pretty much the gold standard for training large language models, or LLMs as they're known.
Okay, so we hear LLM a lot these days, but for those who might not be totally familiar with the term, can you break down what they actually are and why they matter so much to investors?
Sure, LLMs are basically these complex algorithms that let AI systems process and generate text that sounds a lot like us humans. Think of it like those chatbots popping up everywhere, or even those tools that can write different kinds of creative text or translate languages in real time.
So that's where LMMs fit in.
Exactly. And what makes NVIDIA so important is that their GPUs can handle the insane amount of computing power needed to train these LLMs.
So it's not just about raw power then, right?
It's about having GPUs with a specific architecture and features that are made for the kind of parallel processing that AI demands.
So NVIDIA is like the supplier of the essential tools for this AI gold rush.
That's a good way to put it. And the report even mentions a potential rival, a Chinese AI company called DeepSeek that's developed their own LLM.
DeepSeek, huh? That's interesting. Should we be worried about them taking a chunk out of NVIDIA's market share?
It's worth keeping an eye on them for sure, especially since DeepSeek's LLM has shown it can hold its own. But NVIDIA has a few big things going for it.
Like what?
First off, they've been in the AI game for a long time. They've been investing in this stuff for years, and they've built up a pretty impressive ecosystem of hardware and software.
So they have that first mover advantage.
Exactly. And second, their reach is global. They've got partnerships with all the major tech players.
So a strong network.
You got it. And third, they've consistently shown they can ramp up their GPU production to meet demand, which is huge in a field that's growing as fast as AI.
So basically, while DeepSeek is a name to remember, NVIDIA is still the one to beat.
For now, at least.
All right, let's talk numbers. The report says NVIDIA has a market cap of a whopping $3.4 trillion with a PE ratio of 18 and a dividend yield of 0.03%.
Those are some impressive figures.
Yeah, and they also highlight the massive investments that companies like Microsoft and Meta Platforms are pouring into data centers that are all about AI.
Right, and those investments are a clear signal that the demand for NVIDIA's GPUs is only going up.
Yeah.
These companies are betting big on AI, and they need NVIDIA's hardware to make it happen.
It sounds like NVIDIA's in a pretty good spot for future growth.
Definitely a company to watch.
Okay, next up we've got Taiwan Semiconductor Manufacturing Company, also known as TSMC, ticker symbol TSM. They're the world's leading manufacturer of semiconductors, which are basically those tiny chips that power all our electronics.
Semiconductors are everywhere these days. It's amazing how they've become so essential.
Totally. And TSMC is right at the forefront of this industry, making chips for some of the biggest names in tech, like Apple, AMD, and even NVIDIA.
Yeah, they're a true powerhouse in the semiconductor world.
For sure. The report mentions their incredible revenue growth, a 37% year-over-year increase in Q4, bringing them to a total of $26.9 billion. And they also highlight TSMC's technological edge, especially their 3-nanometer and 5-nanometer chip technologies.
Ah, yes, the nanometer game.
Can you break that down for us? What do those terms actually mean, and why should we care?
Basically, it all comes down to the size of the transistors on a chip. A nanometer is 1/billionth of a meter, so we're talking insanely small scale.
Wow, that's tiny.
And the smaller the transistors, the more you can pack onto a chip, which means more processing power and better energy efficiency. TSMC's ability to mass produce chips at these ridiculously small sizes is a testament to just how advanced they are.
So they're basically creating the most powerful and efficient brains for our devices.
Yes.
Now, looking at their key figures, TSMC has a market cap of $1.06 trillion, a PE ratio of 39.36, and a dividend yield of 1.21%. But beyond the numbers, what makes them a good investment for someone who's interested in tech?
For starters, they're the go-to chip maker for so many major tech companies, which means they're deeply embedded in the global supply chain. As the demand for semiconductors keeps skyrocketing, driven by things like AI, 5G, and the Internet of Things, TSMC is in the perfect position to capitalize on that growth.
They're in the right place at the right time.
Absolutely. Plus, their technological leadership gives them pricing power. They can charge a premium for their cutting-edge chips.
Sounds like they built a pretty solid moat around their business.
Definitely.
Okay, let's switch gears to a company that's been making headlines lately, Meta Platforms. the parent company of Facebook, Instagram, WhatsApp, and Threads, ticker symbol Meta.
Ah, Meta. They've certainly been shaking things up, especially with their big investments in AI and their development of the Llama LLM.
Yeah, they're not just a social media giant anymore.
Not at all. They're also a major player in digital advertising thanks to their massive global user base.
Speaking of massive, the report lists their market cap at $1.9 trillion, with a PE ratio of 65 and a dividend yield of 0.27%. And get this, their Q4 2024 ad revenue was a whopping $46.8 billion, a 21% jump year over year.
That's some serious growth.
It is. So what's driving those numbers?
Their user base is a huge factor. We're talking about 3.35 billion daily active users across all their platforms.
That's a lot of people.
Yeah, that kind of reach is unheard of, and it translates into a goldmine for advertisers. But they're also constantly innovating. Their development of the Llama LLM is a big deal. It shows they're serious about building their own AI capabilities, and they're incorporating AI into their advertising platform to make targeting and personalization even better.
So using AI to make their advertising even more effective, which makes them even more appealing to advertisers. It's a pretty smart strategy.
Definitely a smart move. Now, what about their foray into the metaverse? How does that play into their investment potential?
That's a good question. The report dives into that a bit.
The metaverse is definitely a long-term play, but Meta is pouring resources into it. They believe it's going to be the next big thing in computing, and they want to be leading the charge. It's a risky move for sure, but if it pays off, it could be a game changer for the company.
So lots of potential upside, but also a lot of uncertainty.
Exactly. That's the metaverse for you.
Okay, let's move on to another tech giant, Alphabet Inc., the parent company of Google, ticker symbol GOOGL.
Alphabet is like the ultimate tech conglomerate. They've got their fingers in everything from search and advertising to cloud computing and AI.
I'm doing pretty well in all those areas.
They are. They dominate search, have a massive advertising business, a rapidly growing cloud platform in Google Cloud, and they're investing heavily in things like artificial intelligence and quantum computing. They're a force to be reckoned with.
The report highlights their diverse portfolio, which includes products like Google Search, YouTube Android, and Google Cloud. And they also mention Alphabet's investments in AI through their subsidiary DeepMind. Can you tell us a little more about DeepMind and why it's so significant?
Sure, DeepMind is one of the top AI research labs in the world. They've made some incredible breakthroughs in areas like game playing. The AlphaGo program famously beat a world champion Go player, and protein folding, which has huge implications for things like drug discovery and disease research. These advancements really show Alphabet's commitment to pushing the boundaries of AI, and it's attracting some of the brightest minds in the field.
So they're not just buying up companies, they're building world-class research capabilities in-house.
Exactly. They're playing the long game.
Now, the report lists Alphabet's market cap at $2.3 trillion, a PE ratio of 35.55, and a dividend yield of 0.43%. What are some of the key things investors should be thinking about when they're evaluating Alphabet as a potential investment?
Their dominance in search and advertising gives them a really solid foundation. Google Search is how billions of people around the world find information, and their advertising platform is incredibly profitable. Their cloud computing business is also growing rapidly, and they're in a good position to compete with Amazon and Microsoft in that space. Plus, their investments in AI and other future technologies give them a lot of potential for growth.
So there's a lot to like about Alphabet.
Definitely a company with a bright future.
Okay, let's move on to another company that needs no introduction. Amazon Inc., the e-commerce giant, ticker symbol AMZN.
Amazon's story is incredible. They started as an online bookstore and have grown into this global powerhouse operating in e-commerce, cloud computing, logistics, entertainment, and more.
It's hard to believe they started with just books.
It's a remarkable journey, and the report highlights their incredible growth, their dominance in e-commerce and cloud computing through Amazon Web Services or AWS, and their constant expansion into new markets.
It seems like they're always pushing into new territory.
They are, and their Prime membership program has been a key driver of their success. It's created a loyal customer base and a steady stream of revenue.
Prime has become almost like a subscription to the modern world.
That's a good way to put it. And then there's AWS, which has become the backbone of the internet, providing cloud services to countless businesses and organizations worldwide.
It's hard to overstate the impact of AWS.
It's truly transformative.
Now, looking at their key figures, Amazon has a market cap of $2.42 trillion and a PE ratio of 118.49, but no dividend yield. They're also projecting an 11% increase in revenue, hitting $706 billion in 2025.
Yeah,
What are your thoughts on Amazon's valuation and their prospects for the future?
Amazon has always been a growth-oriented company. They reinvest heavily in their business, and they're not afraid to take risks and try new things. That's how they've been able to disrupt so many industries. Their lack of a dividend yield might not appeal to all investors, but for those who believe in their long-term vision, Amazon remains a compelling option.
So a bet on continued innovation and disruption. All right, let's wrap up this part of our deep dive with our final company for today, Microsoft Corporation, ticker symbol, MS.
Microsoft, a true tech veteran. But they've gone through quite a transformation in recent years under CEO Satya Nadella.
Yeah, the report really emphasizes their shift towards cloud computing and AI, and they've definitely been successful in those areas.
Their Azure cloud platform is a major player in the market, and their investments in AI are paying off.
They're not just resting on their laurels.
Not at all. Their key figures show a market cap of $3 trillion, a PE ratio of 39.54, and a dividend yield of 0.81%. And they're expecting a 16% rise in revenue to $65.6 billion in 2025.
Those are some solid numbers. What are some of the key things driving that projected growth?
Their cloud business, led by Azure, is growing like crazy as more and more businesses move their operations to the cloud. And they're smartly integrating AI into their existing products like Office 365 and Windows, making them more intelligent and efficient.
So leveraging their existing user base and using AI to add even more value to their products.
Exactly. It's a winning combination. And their gaming business with the Xbox console and their game streaming service is another area where they're seeing growth.
Seems like they have a lot of irons in the fire.
They do.
Thanks for joining us on this deep dive into the world of tech stocks. We hope you found it insightful and informative.